Hi guys, welcome back to my channel. In today's video, I'm going to go through my scalping strategy with you guys. So currently in the market, we have been getting a lot more of a scalper's market. So I think this was a good video to go through and kind of refresh you guys on what I do when I look for quick scalps. That being said, as always, don't forget to hit that like and subscribe button, and let's go ahead and get started. So when you are scalping, price action is king. Actually, any strategy that you implement, price action is king. However, with scalping, it is very, very important for you to understand price action of the stock that you're trading. That being said, you also need to be able to chart properly. You have to have all of your support and resistance levels, all of your supply and demand zone charted prior to you being able to scalp the ticker that you're looking at. The second thing is to make sure that you always have a trading plan. Every morning, I get up about an hour before the market opens and I create a trading plan for the day. This will depend on what I see in the market, overall news in specific sectors or a specific stock, and then I plan my trades out. I will plan when I enter for calls or when I'm going to enter for puts. So once you have your stock charted, I'm going to show you guys a rundown of how I set my trading plan for the day and how I utilize this to scalp my stock. So let's say, for example, Nvidia has news today and I'm looking to trade Nvidia on the day. What I will do with any ticker that I put on my trading plan or my watch list is I will go to the 5-day 15-minute time frame. So I'll go on the 5-day 15-minute time frame, and here I will look for where I'm going to enter for calls and where I'm going to enter for puts. So specifically for Nvidia, let's say we're looking at it right here. I also like to look at the pre-market as well. If there's any movement in the pre-market, I will use that data as well. So let's say, for example, I'm looking at Nvidia on this day. So you can see here, I usually like to use the previous day high and previous day low, as well as the pre-market high and pre-market low as my initial levels of entry. So just looking at Nvidia here, if we look at the pre-market, we didn't get much movement in the pre-market. So then I will move into the previous day high and low. So the previous day high on Nvidia is going to be around 499, okay? The previous day low on Nvidia is around 494. Now, if I were to trade Nvidia, I would take Nvidia calls above 500. The reason behind that is that 500 is the next significant level of resistance on Nvidia to the upside. On top of that, 500 is a psychological level. So usually these are take profit levels, and you'll see a lot more sellers or buyers sitting at these levels waiting for their orders to be executed. That being said, on a day like this, if I'm going to create a trading plan on Nvidia, my initial plan to the upside is going to be Nvidia above 500 for calls, Nvidia below 494 for puts. Then what I do is I'll set profit targets, and those profit targets are going to depend on the next levels of support and resistance that I have on the stock. For example, on Nvidia, if I were to take Nvidia below 494, my next level of support would be 490. I would probably put this at 493. And then below that, we have Nvidia at 491. And then below 491, Nvidia can sell down to around 489. So those are my profit targets to the downside. Below 494, my first profit target is 493. My second profit target is 491. Now, let's say that I missed the 494 break on Nvidia. So I wasn't able to capture that. I wait for it to pull back at my next level of support. If it doesn't pull back at 493, I will wait for a pullback at 491. So what you don't want to do as a trader, let's say that Nvidia opens up and it breaks 494. So it breaks 494, you miss that entry. It continues into 493. What you don't want to do is enter somewhere here. At this point, you're chasing the stock. It already broke your initial level for entry. It cleared the first profit target you had, and now it's approaching the second profit target. You want for the stock to pull back, retest that support level that now becomes resistance. You can enter here as it rejects into your next profit target. Okay, so there's two entries you could take here. Let's say you missed the first, let's say you missed the 494. Okay, you could take the retest and rejection. So you could enter at the rejection of 493 down to 491 and 489. Or you can wait for it to break 491 and your profit target would be 489 and then this 488 level or 487 level on Nvidia. So in this one play, there's multiple entries that you can take depending on what happens. The first entry below 494, Let's say you missed that. The second entry can be a rejection of the retest level, and then the third entry below 491. So it's really good to have multiple profit targets when you are trading or when you're setting your trading plan, so that if you miss your initial profit target entry, you still have multiple others and you can wait for a pullback and then re-enter at another level. That's why it's so important to have multiple profit targets. And I want to show you guys how I set my daily trading plan. So you can see here, I always base my trading plan off of whatever catalyst that the stocks have, if they have news. And then from there, this is how I set my profit targets. Tesla calls above 260. I will enter above 260. My first profit target 262 and then 264. This can change depending on what I see in order flow, level 2 or BOOKMAP, and also what I see with futures. And you want to go with the flow of the market overall. Same thing with the downside. Puts below 256. My profit targets are 254, 252. Let's say I missed a 256. I will wait for it to pull back somewhere prior to me entering, and I still have multiple profit targets after that to be able to take that position to on Tesla or whatever ticker. Another way that you can scalp is depending on the range that the stock creates. I'm going to take SPX from last week. So we're going to take SPX here, and I'm going to show you guys how you can take the breakout of a range. Usually within the first hour of a market open, if a stock is ranging, it does give you very clear levels of support and resistance. Those are going to be your intraday levels of support and resistance where buyers or sellers are sitting. If those levels of support and resistance break, you're going to get very clean price action either to the upside or downside. The more touches to that intraday level, the cleaner or bigger the break is going to be. For example, here on SPX, you can see we were in a range. It bounced twice off of the 47.83 level. That 47.83 level now becomes an intraday level of support. If it breaks that, you could potentially enter. For this play, you can enter at the break of 47.83, and then your profit targets are going to be the next levels down, 47.80, 47.75, 47.70. Let's say you miss the break at 47.83. You wait for it to pull back and you take the next level of support. You can see here it broke 47.83, pulled back here at 47.80, your next level of support, and you can take the breakout there. Pulled back again, take the breakout there. Now right here, we get a very significant pullback and retest of the EMA. This is a really, really high probability setup here, and there's two reasons for that, okay? So the first reason is that we got a nice move down, initial clean price action, scalp down. The stock pulls back. When it pulls back, not only does it pull back and retest the previous level of a support, which was 47.75, that is now resistance, it also pulls back and retests the 9 EMA, holds below that 9 EMA. As it's retesting, it creates a bear flag. Okay, so this is a bear flag, clean bear flag on SPX. Now, once you see this bear flag, there's multiple plays you can take here as well. Okay, so let's say you miss this first move down. Okay, you can take the break of the bear flag. This also comes with the rejection of the retest. Okay, so you can enter here into your next profit target, which would be 47.60. Okay, if you don't want to take the break of the bear flag, you can wait for it to break 47.70 and enter on this candle your target, the next level of support down below that 47.55. So those are your two profit targets to the downside. So whenever you see a stock create a range like this within the first hour of market open, this is a really good setup. Wait for either the breakout of the top of that range, which is your resistance level, or the bottom of that range, which is your support level. Either breakout is going to give you a high probability setup. Make sure that futures also are your leading indicator. They are giving you the move on top of volume, and this is a clean setup to the downside. The next thing you want to look for when you're scalping is order flow. So order flow is extremely important when you are scalping. So there's a couple different ways that you can see order flow, whether using level 2 and times in sales or whether using BOOKMAP. Personally, right now I am using BOOKMAP, and it is very easy to see level 2 on, it's very easy to see order flow on BOOKMAP. And I did make a video on this, so I will link it below so you guys can go watch that and see how to read BOOKMAP. But that is another thing that you want to pay attention to when you are looking to implement scalping as a strategy. So the reason you want to watch order flow, and I'll give you an example here, okay? So let's say you're watching Tesla, okay? You're watching Tesla below 263. You can see Tesla also created a little bit of a range on this day, and 263 was the support of that range. Now, let's say that you want to buy puts below 263. You see that on BOOKMAP, there are heavy buyers sitting at 263. The reason you want to watch that is, one, it tells you whether there's buyers sitting there or not. So that is a clear indication that you need to wait for those orders to get filled prior to you executing this position, okay, entering this position. Once you enter the position, you want to look to order flow to tell you where to exit, okay? Not only obviously you're going to use price action, but price action plus order flow is going to give you the highest probability play. So let's say you enter at 263, the break of 263, you have your profit target at 262 and 260, okay? Let's say at 262, you don't see significant buyers sitting there. So that means that you could potentially hold this play. The next significant level where you see buyers is 260. So as the stock makes the move down, it clears your first profit target. You can scale out closer to where the buyers are sitting on Tesla. Okay, so instead of exiting right at 262, you see that there's no buyers present. You can continue to hold this position into your second profit and exit as it approaches that level of buyers. Okay, so order flow when you're scalping is going to help you capture a bigger percentage of that move. Because when you're scalping, your profit targets tend to be very close to one another. Order flow is going to help you be able to capture multiple profit targets instead of just one. And I'm going to show you guys one more strategy to implement when you're scalping. I feel like I put in multiple strategies in this, but I just want to show you guys one more scalping strategy that I've implemented. And this one I have seen a lot of success with. A lot of my students utilize this strategy as well, and it's the VWAP and EMA cross. And I think I may have mentioned this before. So what you're looking for when you are looking to take that trade, so what you're looking for is for the stock to break either above or below the EMA. So if it's trending below your EMAs and your VWAP, you want to see it break above and vice versa. So in this specific play here, you can see that Tesla made a move up, found a level of support here, okay, and then it has a level of resistance, which is its high of day here at around 255.50, okay? So there's a couple plays you can take in this specific chart as well. So it creates a level of support here on Tesla. Now it's approaching its VWAP level. So what you see here, right here, is a cross of the VWAP and EMAs. Once your EMAs cross above your VWAP, it usually signifies a reversal to the upside. You want to make sure, obviously, that there's volume behind the trade and that ES and NASDAQ futures are making the move as well. Okay, so volume is the most important thing. Once you see volume behind the trade, this is one entry. Your target can be your high of day. Okay, you can see broke out of VWAP, broke out of your EMAs, the VWAP and EMAs cross, retested. Your VWAP is going to be your stop loss, pulled up, retested, and continued hit to the profit target. Okay. If you're looking to not take the specific cross of the EMAs, this could just be an indication that the stock is reversing to the upside. You can wait for the break of high of day, enter on this candle for the next level of resistance that you have on this stock. Okay. If the stock is trending below its VWAP or above its VWAP, it rejects at a specific level of resistance or bounces on a level of support, and the stock pulls back to that VWAP level. If you see the EMAs cross the VWAP with high volume, usually signifies a very high probability trade to the opposite side. Okay, so a reversal either to the downside or a reversal here to the upside on Tesla. And this has worked with multiple different tickers. You can take the cross of VWAP on futures. You can take the cross of VWAP on SPY, whatever the case may be. VWAP cross. A VWAP tends to be a significant level of support and resistance on whatever ticker that you're trading. So because of that, if it breaks that level of support, it's similar to taking a breakout of any level of support that you've charted. If it rejects VWAP, you can enter on the rejection of VWAP. If it bounces off VWAP, you can enter on the bounce of VWAP. So VWAP is an intraday indicator. You can't utilize it on higher time frames. It doesn't work. You want to utilize it on the 5, 15-minute, 2-minute, 1-minute time frames, and these are the trades that you want to look out for when you are implementing VWAP with your EMA crosses. These are going to give you high probability scalp plays in the market. So those are my tips and tricks on how to scalp in today's market. If you guys have any questions on anything I went through in this video, go ahead and comment them below, and I will see you guys in the next video. Bye.